Hello and welcome to another update video about LINK. Yeah, pretty painful to watch that price action at the moment. It's been really boring. LINK continues to move in this range here, still holding the orange support region, but my preference is that this wave 2 correction has started, that the wave 1 topped here and a wave down. Okay, the B wave might be unfolding still, and then we could get a C wave down later. And as soon as this wave 2 is finished, we could get a third wave rally to the upside. This is my perspective because I can count 5 waves to the upside from the June low. So we technically have this pattern that we've been tracking for a long time now completed technically. Doesn't mean it has to be complete, but the minimum requirements are fulfilled. And we had a brief break of support here, and it would look best now if the wave 2 had started. Okay, the wave 2 doesn't have to be started. It could be that we get one more extension in this wave 1, which is our yellow wave count here. So we might get one more extension higher. But yeah, basically I'm watching for confirmation that this wave 2 is really unfolding. And I will tell you in this video what that confirmation would be. And I'll tell you about the relevant parameters here on the chart. If we go to the 1 hour time frame, on the LINK chart, there are 2 patterns I'm tracking. Let's start with the short-term bullish one, and then we can talk about the short-term bearish one. In the short-term bullish scenario, and that gives you very clear parameters, the price must not break below the $70.35 level, this wave 2 low, because that would invalidate the yellow count as it is. That's the invalidation point. At the moment, there is no evidence that this B wave low is in. Basically in the yellow count, we're looking at an ending diagonal pattern, and this wave 1 would still be unfolding. It would be one more extension, but because of the protracted nature of that decline, that's not what I prefer. In this scenario, this here was a wave 1 which topped on the 21st, a wave 2 pullback, then now an A-B pattern in the third wave. We should then get very soon the start of the C wave to the upside of the third wave. And I mean, roughly where should it take us? It should take us roughly from here to round about $22. Then we should get a fourth wave pullback and a fifth wave. Okay, that's short-term bullish. It gives you a very clear invalidation point, because I will also talk about the short-term bearish count. And the question is always, when you're dealing with conflicting counts, how can we distinguish between the two? That's actually all you need to know. And it is that swing low. If that breaks the yellow count as it is invalidated. Then we have to take a step back and have to say, okay, one count is invalidated. Does the white count still make sense? Does it develop as it should be in this scenario? And so on, you know. But the chart would clarify its intentions. That's the short-term bullish count. So I even gave you the next upside target. That is basically also in line with this previous swing high, which could act as resistance, yeah, around $22. But we need 5 waves up, and it might take us into the mid $20 region, this diagonal. In the white count, a B wave might have topped. In the white count, the larger degree wave 1 finished around the 10th of March. We formed an A wave to the downside. This here clearly is a corrective move up at the moment. So I prefer the white count that this is a B wave rally. But the B wave, even the B wave could extend a bit, okay? But it could have topped. It could have topped, and it's either a B wave rally or a diagonal, but not an impulse. So we can rule out the impulse. That means it's not great for trading, at least not from an Elliott wave point of view. And also trading on the long side, short term, would mean, okay, you know, that there would have to be probably a stop below that 22nd of March low, because that's the invalidation point, right? But the reward to risk ratio, I don't think it's great here. Now, in the white count, if the B wave topped, it would confirm that further with a break below that, yeah, $17.50 level. Or $17.30 rather. If that level breaks, that would confirm further the white count, and we should then see a C wave rally, not rally, C wave breakdown to the downside towards the $12.80 level, which is the 38.2 retracement of the entire distance of the price rally between June last year and March this year. So that's a common support area for a wave 2 pullback. But to confirm that the B wave indeed has topped, I need to see a break below that level, followed by a break below the $16.27 level. The B wave could still extend, and one more high would still mean it's a 3-wave rally, just a larger one. Only the 4-5 pattern would make it to an extension of the wave 1. Okay, so that's why I say I need to see a break also here below that the 1730 level to confirm the B wave has topped. Very slow price action, just consolidation. It leaves us with a lot of options, but I gave you a clear level that helps us to distinguish between short-term bullish momentum and short-term bearish momentum. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.